Hello and welcome to today's edition of Charting the Markets. You're with me, Sean Murison, Senior Market Analyst at IG South Africa. On today's economic calendar, we do have that weekly unemployment claims out of the US coming out a little bit later, and it is the start of the Jackson Hole Symposium. So over the next couple of days, 3 days or so, we'll be watching very closely what's happening with central bankers or their commentary pertaining to, obviously, inflation outlook, growth, and the path of monetary policy. Looking at some charts, starting off with the US dollar, because it does all start with the dollar. We can see that we had a tentative break here. We have this sort of long wick candle above that 103.15 level. The price has continued to consolidate. So a bit of a battle between bulls and bears going on with that dollar. We're sitting in that short-term range between 102.80 and 103.15. Now, we do think that the longer-term trend is non-directional. It's sideways. We've talked about the price zigzagging back and forth through that 200-day simple moving average. So the longer-term trend is not up at this point in time. So what we do here is we look at trading between the levels. Right now, I think for short-term directional guidance, we're looking at this range. We want to see the price settle either above or below that range. Upside breakout would be considered on a strong price close above that 103.15 level. Then we start looking to our targets there, 104.35. And we'll see how it approaches that level. We could close above that. Then we could start looking at 105.30. We take each level as it comes. The alternative scenario is a downside break of that 102.80. In each, where we start targeting me back to about 102.50 and possibly even 101.85. So that is quite key for short-term direction. Possibly over the next couple of days, we'll see some volatility returning and some type of directional bias. But for now, we're waiting for that breakout. If we do get the upside breakout or the downside breakout, I think you could have a stop loss on the close above or below, depending on it's up or down, at the midpoint of that range. On that, so about 103.00. It's on the dollar basket. Looking at the euro dollar, interestingly enough, we have now seen the price just tick below that 200-day simple moving average. So I've been watching, using that as a gauge for longer-term trend. And we can say that that longer-term uptrend has been broken. Now, that doesn't assume automatically that we are in a new downtrend, but we consider it sideways for the time being. So again, what we're looking at is trading between the levels, so looking for breakouts and reversals off the levels. Now, we did see the price moving below that 1.0800 mark, and then sharply coming back up. And this green candle is what we call a hammer formation. So a suggestion of an intraday reversal. And it's off a level of support and from oversold territory. Confirmation of that, we want to see a positive close on the euro dollar today. So that would be euro strength, dollar weakness. But I'd also like to see, and just using an extra filter here, move above this downward red trend line that we have in our chart before committing to the long side and targeting a move back to about 1.1000 on that. Now, that doesn't have to happen. We're waiting to see, that price movement. We could still have a downside break. Downside break would be considered on a sharp close below that 1.0800. That situation would suggest renewed dollar strength relative to euro weakness, and we would target a move back down to about 1.0685. So as we saw with the dollar basket, we are sort of adopting a bit of a wait and see approach, but we are looking at breakouts for our criteria for new direction. Longer term trends are indeterminate. They are sideways, and so we are looking at long or short positions depending on how we approach different levels. Looking at cable, pound versus the US dollar, another example of a short-term consolidation. But here we do see that price still above that 200-day simple moving average for the time being. So the suggestion is that longer-term bias is still to the upside. So for us, we would be looking for keeping a long bias to trades. Where would we be looking for longs? Well, on an upside break of resistance of this gray box here, because that is the short-term range within the cable is trading. A break above would suggest, well, now we're picking a new direction. We start considering a move towards about 1.2965 initially. And if we get through there, possibly 1.3135. Downside break, we wouldn't be looking at short because we're still respecting that longer-term trend bias. But what we would be looking for is a bullish price reversal off support here, initial support being 1.2543. Where do we change our bias? Only when we start trading below that 200-day simple moving average, which is the blue line on our chart. Looking at some indices now, starting off with US Tech. Tech is where it's all been at this year. NASDAQ has been the outperforming sector, the index, benchmark equity index this year globally. But we've had that short-term decline, and we have talked about that double top, which was a suggestion that we're going to have a bit of short-term correction or pullback of that longer-term uptrend, which is still firmly in place. Now, if we're looking for confirmation on the upside, is to see, well, this pullback has ended, and we had that. We had a bullish price reversal of trendline support, and that 14,660 level. Those who are looking for extra confirmation would have found it yesterday. That price move above that trend line, that downward trend line, suggesting, well, the price has stopped correcting now for the short term, and we start targeting these moves, these levels above 15,415, very, very close, possibly even 16,000 on the way back up. If you have managed to get long on that initial reversal, you might have a stop loss on a close below that reversal low. That is quite far from where the price is now, so you might want to consider having it trailing it between a one-day low, or even using a halfway mark on this long green candle as a level of support. That's sitting about 15,040 as a possible stop loss indication. Those traders that are considering long or are currently long on the NASDAQ 100. S&P 500. I think it should be mentioned that there's some hype around the tech sector there. Markets responded quite positively to those Nvidia results out yesterday. And obviously, there's some tech influence in the S&P 500. Some companies are dual listed between the NASDAQ and the S&P 500. So here we have a similar picture where we've had price pulling back. That pullback looks to have ended with a bullish price reversal. We've had a bit of a stronger continuation there yesterday. We are trading at our level 14,460. You want to see a close above that before we can start targeting our next levels. And depending on how conservative you want to be, but 4,520, the highest sitting at about 4,590 odd. And then we do have that overhead resistance at 4,630. So upside breakout could suggest a continuation thereof. Having a stop loss maybe at about 4,000, tightening it up to about 4,430 might be a consideration for traders who are long in line with that longer term uptrend, and on the suggestion that that short term correction of that longer term uptrend has possibly ended for the time being. Moving over to the DAX. Now, the DAX has also ticked just below that 200-day simple moving average, and we do think that that longer term, it does suggest that that longer term uptrend may be broken. Depends on how much leeway you want to give there. But I think what's relevant right now when you're trading something like the DAX 40 or Germany 40 is a range-bound price environment. We do see at least in the short to medium term. Debatable over the longer term, but we've had a bullish price reversal off support and from oversold territory off that 15,485 level. We have had a move now and a close above 15,715. Today's price action a little bit more negative, but we'll see still a long way to go in today's session. But that breakout suggesting that 15,990 is a possible target on the upside. So discretion here, maybe using trailing a stop loss and a close below 1 or 2 day low might be a consideration, and that's depending on a person's threshold for risk. Now the FTSE 100, that is a clear sideways range-bound price environment over the long, short, medium, and longer term. Well, it's over the long term. In the short term, we've had a nice bullish reversal off support here, that lower level of support at 7,200. We've had a close back above that 7,285, and that does suggest that 7,410 would be a possible upside target from that move. Maybe having a stop loss below that 7,285 level might be a consideration for that. And again, when we see this market that is moving sideways, non-directional, traders, trade it differently to how they would trade a trending in market environment. We trade between levels, we wait for breakouts of levels, we look for reversals of levels. At the moment now, we've had a bullish reversal off that 7,200. We've had a break above that 7,285 level. And so we are targeting 7,410 initially. We'll see how we approach that. If we get a break above that, we can start looking at 7,560. Or if the price starts to falter out, peter out, then we'll say, well, maybe we're looking at retesting these lower levels again, but we take each market as it comes. And right now, we do have that reversal in play with a slight bullish bias. That reversal also supported by the oversold signal on the stochastic oscillator. Moving over to some commodities now, starting off with Brent Crude oil. Brent Crude has actually given us quite an interesting picture here. So nice bearish reversal off that 87 resistance. We had a nice move towards that 83.80. We actually had a break below that, but turned out to be a false break. Probably could have had that level a little bit lower on that. But the next rally did fail, and it ended with this bearish engulfing candle. And we just got that candle pattern. So we've got that just circled red. That was a suggestion that move up has come to a short-term end, much like this bearish Harami type pattern circled black suggested that that move had come to an end. Difference between the two levels, this one reversals a bit more credence because there was that overbought signal to accompany it, and it was at a level. This one here doesn't quite have the same support because we weren't in overbought territory and we weren't at a price level. However, it's still relevant. What is quite interesting is that we do have possible head and shoulders reversal formation. So just mark that with L, H, and R on the chart. So the left shoulder, the head, and the right shoulder. What that is a suggestion of is a short-term trend reversal. We said the longer-term trend for Brent Crude is sideways, but in the short term, we have this head and shoulder suggesting, as a function of this move higher, that perhaps there is a little bit more downside to come. Now, 81.60 was our initial target. We did have a bit of just a little, almost touch of it of that level. I think that is still a relevant level. And if we get a close below that, maybe even 78.50 on the downside for that. So longer term trend for oil or Brent crude is sideways. In the short term, we have some bearish patterns in play. We have that head and shoulders reversal in play. Where does it fail? Well, technically, you want to move above that right shoulder to say, well, that pattern has failed. But if you are trading that and you're short, where would you have a stop loss? Obviously discretionary there, but maybe you close above a 1 or a 2 day high, depending on how much risk you're prepared to take from current levels. Now, spot gold starting to rally with that slightly softer dollar. We have a bullish reversal here, not quite at our levels, just slightly above. I think the low sitting about 1,885. That reversal has come from oversold territory. Longer term trend now considered sideways for gold. That upside target there of 1930 is that initial upside target. We had quite a big move yesterday, so we'll see if there's some follow through coming through there today. Initial stop loss would have been close below that low at 1,885. I think now that we've had a bit of a move in the right direction, traders might be sort of trailing it up maybe to about that 1905 mark or 1910 mark, dependent. But again, we're still trading between levels, and we'll see how it approaches that 1,930 level. If it fails before then, we get a bearish reversal, then we'd say, oh, start looking at short trades. If we see another push and a close above, then we'd say have a break of a level, and we're trading towards our levels. We're trading towards our limits rather than trying to ride out trends. Now, platinum, spot platinum, also got an interesting chart here. Longer term trend is sideways for platinum. It's quite obvious, similar to that FTSE chart in some ways. But in the short term, we have this W shape, this double bottom type pattern. So as a function of this leg down, we see this W shape, and that's suggestion that, well, that move lower has come to a short term end. We stopped making lower highs and lower lows, and now we started to make higher highs. So that is a short term trend reversal. Longer term picture is sideways. We're still trading between levels. That initial target of 940 has been realized. I think if we get a close above that, that's when we can see those unlock, possibly a move back towards about 980 on spot platinum. All right, that's all the charts from me. Sean Murison, Senior Market Analyst at IG South Africa. Thanks very much for watching.